My presentation for Writing 250 is about the effects of recent tax reform on corporate audits and taxpayer behavior. Tax reform can be approached from many different angles, but most often, articles look at the reform from the individual taxpayer's perspective and how individuals will change their habits to derive the maximum benefit from tax reform. However, when considering tax reform in large accounting firms like Deloitte, where I completed my internship, the primary clients are corporations that require audits. Tax reform can present many uncommon challenges for tax specialists working on these audits. For example, calculating deferred tax accounts when tax reform has recently passed is not easy. One must consider when the deferred accounts will become current and must audit the balance sheet amounts to confirm that the client has considered the gain or loss from the deferred accounts in the future. Tax reform can also significantly affect taxpayer behavior. Corporations will search for ways to lower or at least maintain the corporation's tax liability. With changes in deductions and what is considered taxable income, corporations will also attempt to find other deductions and ways to benefit from the tax law. While we cannot easily determine how taxpayers will react to the new changes in the federal tax law, we can use examinations of past taxpayer behavior to predict how they will respond to the new law. Evaluating taxpayer behavior in the face of past tax reform, like reform of 1986, can allow us to generalize how taxpayers will react to certain changes, like increased or decreased tax rates, and use those generalizations to estimate how taxpayers will behave regarding recent reform. Throughout my internship, I was exposed to many firm-wide tax reform information sessions through webcasts or meetings or lunch and learns. Additionally, I was exposed to information informally as I heard coworkers discussing reform and how to handle it. I was engaged on a few audits working as a tax specialist, dealing directly with the difficult calculation of deferred tax accounts. The information I learned through the firm was very valuable to my internship experience, but it was often direct tax information. I only experienced problems with deferred tax accounts on the few audits that I worked on. I used this experience to determine the topic for this report. In this course, I've also used other assignments to explore future and current issues created by the recent reform. I then used the University of Mississippi Library's Accountancy and Tax database to research general information about the new tax code as well as the taxpayer response to past reforms and taxpayer education about reform. I also looked into the effect of tax reform on economic growth and how it affects taxpayer behavior regarding spending and saving. The indirect effects of tax reform on individual taxpayer behavior are very important when looking at the economics regarding tax reform. One area that must adjust significantly to tax reform is corporate audits. Though audits only have a small area that's tax intensive, like the deferred tax asset and liability accounts and the income tax expense line item, their timeline and client charge time can be greatly affected by the inefficiency of any area being audited. One of my sources, Berman from 2013, says that decreasing tax rates can be counterproductive as they can cause taxpayers to expend substantial effort to determine the proper tax liability for their financial statements in the reform period. More effort decreases audit efficiency. This reform lowered tax rates. The corporate rate changed from 35% to 21%. This low rate does seem beneficial to corporate taxpayers, but lower rates will reduce the benefits of several currently applicable deductions and other things that will change the tax base. These deductions that no longer exist will not only change the tax base, which changes the amount of tax that the taxpayer is liable for, but will also encourage the taxpayer to spend more energy on finding alternative deductions that will provide the same or greater benefit. This will lower the effective benefit of the lower tax rates because the cost of searching for additional benefits will be greater. Some current deductions will no longer be allowed because the federal government must increase the tax base to compensate for the lower tax rate and in order to continue to maintain a consistent revenue stream over time. Another one of my sources, Almdronic, Trosper, and Sheffrin from 2017, says that broadening the tax base helps ensure equality as well as simplifies the tax prep process. However, broadening the tax base also indirectly complicates the audit process. Calculating the deferred tax asset and liability accounts will now require more effort because of the broader tax base, as well as lower rates. The new calculations will result in a large gain or loss on corporations' financial statements as the corporate taxpayers adjust their deferred accounts to reflect the tax rate change. These changes do provide some benefits. However, According to Writ 2017, removing the alternative minimum tax, for example, will make determining taxpayers' actual tax liability easier than under the current law. This affects both corporate and individual taxpayers and could allow taxpayers to allocate some funds to other areas that were set aside for tax prep. Congress intended for tax reform in the United States to increase economic growth overall. Writ from 2017 notes that pro-reform congressmen must convince reluctant representatives that lowering the corporate tax rate will positively affect average Americans. Essentially, representatives and senators must show that tax reform will increase economic growth and have a positive impact on individuals for reform to be considered successful. Lower corporate tax rates also incentivize companies to do business in the United States. According to Alm, Dronick, Trosper, and Sheffrin from 2017, the focus of the lower tax rates has largely shifted towards corporate rates in the United States, which at 35% are among the highest rates in the world. Lowering these rates makes the United States more attractive to foreign companies, which could increase economic growth in the United States and make the United States more competitive internationally. Overall, with tax reform being passed, there will be an increased interest in tax information and knowledge as they prepare to face tax reform. Legislators must consider the taxpayers' trade-offs in order to balance benefits and sacrifices for a fair and efficient tax code to provide this information. That's from Alm, Dronick, Trosper, and Sheffrin. Taxpayers are most interested in how their tax bill compares to others' bill, especially if they are comparing themselves to others that they think are financially equal to them. Alm, Dronick, Trosper, and Sheffrin also say that most taxpayers understand that fairness is achieved when all types of income are taxed equally. Therefore, lawmakers must consider this when considering policy changes. As lawmakers consider potential new tax reform, it's worth noting that a less complex law requires less education and would allow clients to be involved in other activities that further innovate within their industries, according to Berman from 2013. The tax bill will undergo several periods of review and may change many times before becoming a final version. This long process allows taxpayers to read the new law and enables them to focus on operations and industry innovation rather than suddenly concentrating on financial and tax information. A less complex law would encourage increased economic growth and increase taxpayer knowledge about the law. This growth would inevitably lead to higher gross domestic product as well as industry innovation across the country. This would help American companies become more competitive internationally. It's important to consider how taxpayers will react socially, which includes voting and reevaluating who represents them in Congress. This is important, especially when tax reform is enacted in an election year and can be one of the more easily recognizable and measurable social reactions. Financial reactions, however, can be somewhat more difficult to observe initially. Over time, they're more easily measurable than social reactions, and they are measured using things like household debt structures or overall economic growth. Aspects of tax reform can have a large impact on economic growth and activity, and taxpayers can use their voices to affect this as well as educate themselves on how to better assess their tax liability, according to Engen and Gale from 1996. Most research focuses on tax reform in 1986 and how individuals react by measuring household debt structures, spending, and saving. However, it's important to examine corporate taxpayers' finances. Changes here are helpful when considering how these corporations will respond to new law changes, according to Engen and Gale. One prediction is taxpayers taking advantage of deductions in tax year 2017 that are not allowed in 2018. The changing deductibility of certain transactions will likely affect taxpayers' decisions, and according to Writ from 2017, there will likely be a frenzy of year-end activity to take advantage of the current law and avoid the impact of likely restrictions on deductions imposed by a floor based on AGI and lower marginal tax rates. Tax reform affects all taxpayers and citizens in the United States. Corporate taxpayers are particularly relevant because they provide a large portion of tax revenue for the government and are often targeted directly by legislation that changes tax laws. Especially important to consider is how tax reform affects the corporation's productivity and administrative components like audit efficiency. This research analyzes the effect of tax reform on corporate audits and how tax reform can increase the complexity of and effort required for the corporation's audit. Tax reform will cause corporate taxpayers to adjust their financial position to result in the lowest possible tax liability, which can also affect national economic growth. Using information about taxpayer behavior in response to the 1986 reform, we can predict how taxpayers will respond to the recent reform. This can include changes in debt structures, spending, saving, the amount of charitable giving, among other things. Overall, the recent reform not only affects how much tax a taxpayer is liable for, but also impacts the economy of the United States and how taxpayers spend and save their money. These are my references. Thank you.